Hi, this is Phil Hall of Mortgage News Network. We're here at the Mortgage Bankers Association annual convention, and it is my pleasure to introduce to you Tommy A. Duncan, who's president of Quality Mortgage Services. Tommy, thanks so much for being with us. Let me ask you, what's new, different, and exciting at your company?
Well, the biggest thing is really the push out of our MARS platform, and that stands for Mortgage Analyst Review Software. And the challenge is in the post-closing and pre-funding is getting the technology ready for all the new Fannie Mae or GSE requirements. And so we have been, over a year ago, when Fannie Mae began pushing out their new policies, we ramped up our technology and really first on the block with some of these new solutions. And some of it is meeting the seller's guide for the 2013-05 is where a mortgage bank or someone who sells a Fannie Mae has to audit their QC vendor. At the Miami conference, Fannie Mae released their spreadsheet for how to do that. However, if you're a QC manager, you don't want to spend hours and hours and hours a day entering data in a spreadsheet, maintaining a spreadsheet when the MARS platform can do that for you. So that's one thing. The next thing is Fannie Mae's talking about a manufacturing curing process. And what does that mean? Well, where are the defects of a mortgage loan for QC identified? You don't want that going into your defect scores that count against you. So in our platform, we're the first to offer the curing process for QC in a platform. So you don't get written up for missing documents. You have the ability to cure the manufacturing defects, and these would be insignificant or minor defects that would show up on your defect rate or defect scores. So we're trying to help our mortgage bankers to reduce their defect scores by providing a manufacturing curing process in the QC. And another thing that Fannie Mae is talking about is it's a new word, new terminology to the industry called MAP. It stands for Management Action Plan. And what that is, they want QC managers or executives to evaluate their trending process over a period of time and look at their eligibility defects and see if it's a training issue, personnel issue, process issue, or technology issue. And what we're doing in the MARS platform is capturing that ability for QC managers to track and trend those processes, the training, and all those items, and document it so they can meet that Fannie Mae requirement. So that's something we've been doing a lot of technology, software development in the areas of QC, whether pre-funding or post-closing.
Well, Fannie Mae's been keeping you quite busy. What do you see as the near-term future for Fannie Mae and its role within the housing finance world?
Well, Fannie Mae has made a great impact, and in my opinion, and I applaud them for their efforts in loan quality. You know, years ago it was the FHA that only required QC. And especially with the mini eagle and full eagles. Now I think some of that terminology's changed a little bit and some of those requirements have changed, but Fannie Mae is really taking the lead in this. First, when they implemented LQI, Loan Quality Initiative, I thought that was a great idea. A lot of people had to adjust, but that was the beginning stages. And now what we're seeing in the industry is that loan defects are actually decreasing, and the majority of defects are not risk or eligibility, they're actually compliance issues. So let me answer your question. Fannie Mae's role will continue to offer products to the home buyer out there, and what the result is, because of their policies, is going to implement a better quality portfolio for the industry, whether the secondary market or whether if it's in-house. And what we're seeing is because of the policies they've implemented have been effective, a lot of other investors are adopting some of those policies and procedures and pushing it down to the mortgage banks.
What about the industry as a whole? Where do you see that going in 2015?
Well, it's not going to go anywhere. And I say that with a caveat. If the industry doesn't do anything to fix the first-time home buyer opportunity, whether in policy, it won't improve. Until that's resolved, whether it's some kind of exception to the student loan debt that's out there and having some kind of exception to the rule, I just don't see that the housing industry is really going to take off until the industry's able to tap into the first-time home buyer market. We can continue to have rates at the low rates that they are. That necessarily hasn't helped the volume, but I think right now the industry needs the volume. And the only way to do that is get the first-time home buyers eligible for the new mortgage products.
Tommy A. Duncan, it's always a pleasure to speak with you. Thanks for coming by.
Thank you, Phil. Appreciate it.
This is Mortgage News Network.